Rohr here with an early, concise highlight on Wednesday, August 20th, 2014. It's currently about 7:15 a.m. U.S. Central Time, and it can be a concise highlight today because so much of what is going on with the markets this morning is consistent with our indications from Tuesday morning's global view, trend view video. So with that, we'll take a look at the S&P 500 and only discuss the other markets this morning. Not surprisingly, having more convincingly escaped the 1950 to 55 resistance on Monday after being above it on Friday but dropping back below, the market was able to proceed up to the next higher resistance in the 1975 to 78 area. The higher activity Tuesday was also consistent with the hourly MACD remaining out above its upper runaway band that typically leaves the market able to strengthen and means overbought RSIs and stochastics don't really amount to much as far as anticipating any break. However, the S&P is off $2 today, back down to the low end of 1975 to 78. And of course, after ranging above it a bit yesterday, could not close above 78. If it were to start slipping much below 75, we believe it would appear more vulnerable, even if for now, with constructive central bank influences likely coming in Janet Yellen and Mario Draghi's speeches from Jackson Hole on Friday, any break is likely to be buffered by that still very dovish overall central bank psychology. And, it might only be worth a break back to retest 1955 to 50 area, which was also a bit of a choppy up break going back to late Thursday into Friday morning. And one thing that would occur, though, if we were to spend much time back below 75, is it is likely the hourly MACD would come back off of this escape above the upper runaway band. And that's another thing that could suggest, much as the current weakness back below the upper runaway band on the 30-minute MACD is already indicating, it would suggest that very possibly we are going to see a bit more of a correction. So that would mean maybe at least back down to 55 to 50, and with the market topping once again up into this important high-end area for now. Might even be a broader top, but that would, shall we say, that is yet to be seen. That pretty much does it for the short-term view of the S&P. Moving over to the intermediate-term view, we're looking at a market, as you can see, did have quite a bit of topping action on the continuation picture and on the September contract, which of course was already lead contract when we pushed up to these new highs. And you can see all of the resistance up into the 78 area going back across the last couple of months. Market put on that minor escape when it tested going up to the 1985 area, 85.5, when it tested the topping line for the repeated test across 6 weeks out of early June into late July, when it was primed to either accelerate up or go into the first significant correction for a while. And you can see here as well, looking at the 9 and 13 week moving averages at 1956 to 51, and the previous action on the overrun topping activity from late June, and then the holding actions and the gap lower, why we're so keen to continue to focus on the 1955 to 50 area, even if the lower objective, the upward objective out of the runaway gap back at the end of the May, will still be important down at 1938 to 34 area. And that's what we're looking at for right now.